Hello everyone and welcome to this week's Market Outlook by Exness. Before we begin, let's check on the previous week's idea and how it performed. The trading idea of last week was for a potential short position on gold with a potential target around 1,800. Even though the target was not reached in full, the trading idea was still valid because the price on gold is still slightly declining up to today. My name is Andreas Semistogleus, trading specialist here at the Exness, and today with us we have Stanislav Bernikov, also trading specialist, to provide the trading idea for this week. Hello Stan, and thanks for joining us.
Hello Andreas, thank you for having me today.
So what are your thoughts on the trading idea for this week?
Well, I'm thinking of a potential short for crude oil, which is US oil in Exness. It's CFD for crude oil. So it was reversing below 80 level. So it has shown a relative weakness, a technical weakness, and now it's heading towards the level of 70. So it's in the downtrend, in a medium-term downtrend. So I think it might be ready to get away from the trading range and finally reach the 70 or 69 or maybe even lower levels.
Okay, so what are the key points that the traders need to pay attention to if they are going to proceed with initiating this idea?
Well, all right, so let's first start with the narrative which is behind this idea. So the narrative is recession fears which are going back to the market. We've seen that actually probabilities of interest rate hike for the meeting in May are increasing, as we see from the FedWatch tool. So if we take a look at these graphs, we see that they're actually going up, meaning that the hawkishness of Fed is actually increasing, or at least perceived hawkishness of Fed. What does that mean? That means that the market is very cautious for buying any cyclical assets such as stocks, stock indices, and commodities. And we've seen S&P 500 sliding very massively yesterday, and probably crude oil should follow this trend too. So strong employment, which we've seen in the beginning of February, is kind of strange effect, which probably would be temporary. And crude oil probably should follow the same trend of declining commodity markets, and level of 70, 69 or even lower would be very logical in this case.
So what other factors may affect this trading idea in regards to economic data?
Well, I would say that the most important publication this week is the publication of FOMC minutes, which are going to be published late on Wednesday or early in the morning on Thursday in the Asian time zone. So it is the protocol of interest rate decision for the latest gathering of Federal Open Market Committee. So it might actually bring some light to the topic of interest rates, and of course it might cause some volatility in the markets.
Okay, thank you, Stan. So in summary, the trading idea for this week is a potential short position on crude oil with a target of around $70. The factors affecting this idea is the increasing hawkishness from the Fed, the fears of a recession, a potential recession, which is affecting the commodity market negatively, the increasing yields, and the traders' attention for this week is the FOMC minutes that is most probably going to create some volatility, especially around the publication time. Thank you, Stan, for providing the trading idea for this week.
Thank you, Andreas. Have a good trading week, everyone. Don't forget, this is just the idea, so don't forget to protect your positions at all times.